Hello, everybody. Welcome to another episode of NFA Live. As ever, I'm joined by my co-host, Guy from Coin Bureau, who's looking very trendy in his nice headphones. Hello, Guy. How's things going over there in Dubai?
Yeah, good. Thanks, Rob. Good. Yeah, hot, you won't be surprised to hear. But Dubai's nice at the moment. It's nice and quiet. I'll give it that.
Yeah. Dubai is hot. Not the market is hot, right?
Not the market is hot. Mind you, it's sort of, I noticed it picked up off the back of, I just saw Ben's tweet about was it jobless claims? The market seems to have sort of picked up on the back of that.
Yep. It looks like
something's up. Something's up.
Initial claims dropped to 233,000. And also Ben from Into the Cryptoverse, host of the most talked about party at Nashville, the ITC party. Ben, thanks for coming back to the show.
Thanks for having me here.
Absolutely. So if you guys don't know, Ben's going to take a victory lap today for his great call for the Bitcoin dominance. Don't be shy, Ben. You did a great job. And when everybody, look, I just want to give accolades to what it was. I remember when he first talked about this and people are like, this guy doesn't know what he's talking about. He has PTSD. He's been shell shocked from everything else. And of course, the Bitcoin dominance goes up. I'm very happy with that. So Ben, good job on the BTCD.
I mean, it still could be true that I don't know what I'm talking about and I just got lucky.
Now, yeah, but it's funny. It's funny. The harder you work, the luckier you get. So
yeah,
that's what it is.
Yeah. Take the win, Ben. It looks like a win from where I'm standing.
The few and far between win.
Exactly. So everybody, we've got a couple of questions to focus on today, and we're going through with the big four. So the first thing is this, and everybody talks about macro, but I want to get everybody's opinion because you hear a lot of things, but I want to get the updated version. So we've seen some pretty negative stances in the macro environment. We've got higher unemployment, slowing GDP. We got massive credit card debt here in the States. I don't know what it is globally, but we're looking at over $1 trillion of credit card debt. And of course, there's a big problem with the Japanese yen carry trades, which almost essentially broke the entire world market as everything crashed in one day, which I would consider somewhat of a black swan. So the question I have for both of you is, what is the next shoe to drop? Or is it sideways from here, or nobody knows? But what do you see happening? Guy, I'm going to start with you. Where do you see things happening? I mean, it's a horribly broad question. So if you want to break that down, go right ahead.
Sure. Well, I mean, let's just go through some of those things that you were talking about, because I think that's probably the first place to look when we think about what might be next. And I guess the big thing there is that this yen carry trade, the unwind of that, is apparently only halfway done, from what I've been reading over the last day or so. So I think possibly there's more to come from that. That's still hanging over all markets, really. Obviously, crypto saw some of the biggest drops, but all markets were affected by that. So I guess we shouldn't write off that at this stage yet. Having said that, the Bank of Japan, the governor of that, certainly they seemed to get the memo, didn't they? That, as you say, it was a bit of a black swan. I think some macro analysts have been talking about the yen carry trade for quite a while, and maybe we haven't paid it enough attention. But certainly, the Bank of Japan, they seem to understand that it rather spooked markets, perhaps more than they'd anticipated. So they came out, was it yesterday, and said, okay, that's it for rate rises for the time being. So it suggests maybe that the unwind of the yen carry trade is sort of maybe on ice for the next few weeks, months, however long. But I don't think we can park that and say that's definitely over and done with, and we can all move on just yet.
Agreed.
And of course, yeah, I think that it's interesting because we look at it from such a Western perspective, don't we? But of course, in Japan, as I've been hearing, people have gotten obviously fed up with having to deal with inflation for the first time in a very long time, and the yen being devalued, etc. So I guess the Bank of Japan is in a very difficult position because you've got the Japanese people, on the one hand, and then you've got the rest of the world saying, hey, just go slow, don't
slow down.
Yeah. please slow down. You've just crashed crypto. So I think that's that on the yen carry trade. Debt, I mean, credit card debt is something, and national debt, of course, the US national debt, which is vast, as well as many other countries. I mean, that seems something that's always, that's like the 800-pound gorilla in the corner of the room, isn't it? It's just always seems to be there. It just seems to be, I don't know, I get the sense that's more sort of slowly eating away at markets rather than waiting to blow up, although, of course, it could. There's the geopolitical risk, of course, things like, is something going to happen in the Middle East? So far, it hasn't. There was a lot of talk of that at the beginning of the week. That hasn't happened so far. Let's hope that continues. The only other thing I think might be a potential, if you like, black swan or something to be concerned about is the AI bubble bursting. You know, that it seems to be running out of steam. Obviously, those big companies, those members of the Magnificent Seven that had really gone hard on AI, likes of Microsoft, etc., they seem to have taken a hit after their latest earnings. Google, Alphabet being the same. So I think there is a sense that the billions, maybe trillions of dollars that have been poured into AI, there doesn't seem to have been a massive return on that investment yet. And I just wonder whether that could cause some kind of downturn if that, you know, if that AI narrative really runs out of steam, if that bubble bursts.
Yeah, well said. I mean, there's a lot of things to really consider as far as like the negative. I think, you know, that is just how it is. I'm going to balance that out before we get to Ben with a little positive. And this is from your friend of the show, Nick. And he says some bullish news today. Treasury buybacks with 46 billion in liquidity started. The Bank of Japan pausing rate hikes. FTX to pay out 12 billion cash to crypto natives. Mt. Gox creditors seem to be hodling, which I got to tell you, I did not have that on my bingo card. I thought for sure they'd be selling the heck out of it. ETH ETF inflows this week are net positive. And I will say one more thing. This was from yesterday. Voyager recipients, they received a check in the mail from all their losses, and Celsius, the next rollout for their allocation is coming within 3 to 4 weeks. So there is the positive. And there was also one guy that you put out about whales accumulating. We did a whole video about that yesterday. So I know, like on this show, I try to balance everything out. Usually I'm the negative, or I'm the negative and then a little positive. So I wanted to kind of give it a little bit of a thrust. But having said all that, Ben, what do you got as far as like where we're at, shoes are dropping, all that good stuff?
I mean, Guy covered a lot of it, honestly.
Yes, he did.
The geopolitical stuff obviously is completely unpredictable, so I try not to concern myself too much about that stuff. Sort of like an acknowledgement that, yeah, like some bad stuff's probably going to happen at some point, but it's not really predictable, and so I'm not going to spend my time worrying about it. I think that I think Guy's right about the carry trade, and it definitely was something that people talked about ahead of time. I don't really think of it as a black swan, but I think this is the issue, right? This is kind of the issue right now for the Bank of Japan and the Fed, right? Is so the carry trade, it gets worse when the spread gets smaller, right? So when the Fed funds rate is at 5.5% and the Bank of Japan has it at like 0% or whatever, it's 550 basis points. The Bank of Japan, they've raised rates, right, to 25 basis points. So then the spread between the Fed and the Bank of Japan is reduced, right? So there's two ways, though, that spread can reduce further from here. And it's the Bank of Japan raising rates, again, because they don't, they're starting to see signs of inflation coming in. But we did have the Bank of Japan member come out and say that they're not going to raise rates if the markets are unstable. And then, but you also have the other side of the equation, which might actually be the more interesting side, is could the carry trade unwind more just if the Fed starts cutting rates more? Because that would also reduce the spread. Now, you could argue the markets are forward looking and all that already got priced in with that massive, capitulation wick, right? It's not like the markets can't look forward and see what may or may not happen. But for a moment there, the markets were pricing in like 100 and 125 basis points of rate cuts for the rest of the year. And I think that contributed to that unwind, because you have, on one hand, you have the Bank of Japan hiking rates, and you have the Fed lowering rates, which is not something that we've seen actually happen in a really, really long time. So the reason why that's important is because we are entering the phase of the business cycle where it would make sense for the Fed to start cutting rates, right? Because, you know, you are starting to see some of the, like, for instance, the SOM rule recession indicator finally flashed. Okay. Now, again, a lot of these rules have only been made in recent years. And it's kind of like in crypto, how we make models, but most of those models are just fit to all the prior data. It doesn't necessarily mean they're going to be able to predict the next data point, right? And models can also be overfitted and all that stuff. So yeah, I mean, here's a good example. I mean, this is the SOM rule recession indicator. So you had a combination on Fridays, you know, through Monday of this flashing the recession signal, the carry trade unwinding, and all that stuff kind of happening at the same time, and also a pretty weak non-farm payroll they came in. So I guess the things to watch for now, we did get initial claims today that came in a little bit lower than expected, which was a good thing. So the markets are, you know, up on that news, it looks like. And they're wondering, okay, well, is the non-farm payroll print last week, is it a fluke? I think the other big risk between now and maybe you know, some of the next NFA live streams are the CPI, I believe, will be coming out next week. And so, you know, if that comes in hot, then it might, you know, force the Fed to not cut as much as the market wants. Because I think right now the market's basically saying there's going to be a 50 basis point rate cut. And who knows if that's true or not, right? It might only be 25 basis points. So I think those are the you know, the big things to watch here over the next few months as we go into the end of the year. Like, does the carry trade unwind? I think JP Morgan said that they think it's about 60 to 70% already. It's been, you know, unwound 60 to 70% already.
Okay.
But yeah, I mean, it seems like there's probably a little bit more to unwind there, but predicting the timing of that is going to be very difficult. And I think the way that if there is more to get unwound, it would probably happen because there's, you know, some type of like macro data print that the markets get scared of or something.
Yeah. Well, the markets are irrational, I think, right? I mean, we can all agree there. I mean, we have some good data points, but it doesn't really matter. So I guess that would lead me, you know, you talked about it. Perfect segue. Thank you, Ben, for making my job super easy. So we're talking about rate cuts, and it looks like those are on the table. So the question that we have here is, for rate cuts themselves, we know the Fed's going to cut in September. I mean, that's pretty much the consensus so far. But what could cause them to have an emergency meeting? I mean, could they have an emergency meeting this month and cut rates this month? Is that possible or highly unlikely? And I guess, and also as a piggyback question, which is, what do you see when the rate cuts actually do happen? Because right now, these Treasury yield spreads are looking pretty good, but I don't think the big action happens when we start to uninvert, which you can see usually as time goes on, then we start to hit recessions. So just give us a little background on that one, Ben. What do you think?
If you change the interest rate B on that chart to the 2-year, it's actually almost close to uninverting. We're like really close to uninverting. It actually came to within like 1 basis point, maybe. Yeah, it's not a lot. I mean, it's almost uninverted.
What does that mean for us when we start to uninvert?
Well, that's sort of the weak spot, right? That's kind of that's always like where you could theoretically see the economy slow down, right? And look, there are examples of soft landings. I think that 1967, I believe, 1967, I think, was an example of a soft landing. You could argue there was a soft landing, you know, sometime in the mid 1990s, like 1995, 1996. So it is possible, right? It is possible to have a soft landing. And you could argue that kind of what we saw, like if that ends up being everything, then perhaps that would be what a soft landing would look like, if that's all there is. But yeah, a lot of times when the Fed's, it depends on why the Fed cuts rates, right? So if the Fed cuts rates because they're just, you know, wanting to get ahead of any economic weakness, then the markets can still do fine, as the prior soft landings have shown us. But if they're cutting because the market is freaking out, kind of like they were last week, or on Monday, you know, after the non-farm payroll and after the carry trade stuff, if they're freaking out and the Fed is panic cutting, then that's what causes the markets to panic as well. So there's not really a great answer. I mean, it depends on why they cut in September. If they do an emergency rate cut, I'm trying to think of like what would actually cause that. So if you look at like the 1970s, like 1972, before 1972, we had a wave of inflation. It came back down to just below 3% in the summer of 72, which was an election year. And the Fed got too loose too quickly. And then we had a second wave of inflation. So essentially inflation is where it was back then, right? It's the election year, summer of the election year. Yeah, if you look at 1972, you can see that inflation in the summer of 1972, inflation came down to right below 3%, which is right where it is right now. And I think the risk for or the reasoning for an emergency rate cut could be if we perhaps very obviously deviate from that path, right? So for instance, if in August, if next week when the CPI print comes in, if it comes in at like, some really low number, and you might think like, oh, well, if inflation comes down, that's a good thing. But if it goes down too quickly, it might be a signal that the retail, that the consumer is starting to sort of soften up, right? So that I guess would be the reason why theoretically they could do that. But I don't think they're going to just do an emergency rate cut because the stock market's down 5 or 10%, right? I mean, if anything, the Fed would like for that to happen so that it helps reduce the wealth effect and helps tame inflation. I don't think they're going to have an emergency rate cut just because the market's down for a couple of weeks. I think you'd need something a bit more durable. Now, if the S&P were to drop again, like if the carry trade gets unwound starting next week again, and we're all just sitting here thinking it might not happen for 3 months and it happens next week, and the S&P goes below 5,000 or something, then yeah, maybe I would probably at that point they might think of cutting, or at least cutting 50 basis points in September. But I don't know. I mean, I don't really think that at this point, I don't really think that it makes sense to get too aggressive with the cuts, because you guys just saw the chart from 1972. I mean, I don't know about you guys, but for me, I would rather just get this over with, right? Like, I don't want to go through another 4 years or 8 years of inflation spikes like we saw in the 1970s. I'd rather them just go the distance now so that we don't have to worry about it next cycle, if that makes sense, right? Now, we don't always get what I don't always get what I want, but that would be my preference. Like, just have them stay the course as long as they need to make sure. And it's okay if they overshoot a little bit. Just make sure it's gone. We don't have to worry about it next cycle. And I think that would actually be better for the economy. And that could actually set up, maybe a decade of economic expansion, right? If you go through the pain for a while, then you can have expansion for years and years and years. Otherwise, we're just going to have to deal with the same thing in a year or two, inflation coming back.
Because no one wants to go through delayed gratification, Ben. Don't you know that?
Exactly.
Meme coins, give me YOLO. Come on, man. You know what it is. And then before we get to the guy, Solstice says, my question is, your stream's the best place to go. Genius and objectivity. Why are you guys so awesome? We'll answer that later. But Guy, if you could piggyback on what Ben just said, as far as like, where do you think that the macro is going to go? Do you agree here, or do you feel like, let's just get it over with, or not?
I 100% agree with Ben. I think that definitely get it over with. Do what needs to be done. That seems to be the attitude that the Fed has, and that would suggest that they've learned the lesson of history. And I think Jerome has talked about that the 70s have been referenced before, and I think he has said, he doesn't want to see inflation come back. And what's the phrase he keeps using? Seeing the job done, or seeing the job through, etc. So, I think it absolutely would be the right thing to do to make sure that inflation genie is put back in the bottle and the cork put back in firmly. So, and I guess, and similarly, following on from what Ben said, if they do an emergency rate cut, then that kind of says, well, it's an emergency, isn't it? And then that sort of could that then trigger the market to act accordingly. I think probably what people are looking for from the Fed is a sense, overtly or not, is a sense that they are in control. So I don't think it would be. I think it would have to be a real sort of last resort. to sort of do something out of character, because I think they need to give the impression that everything is fine and that they're in control. Because I think a lot of market participants kind of assume that the Fed has access to more data than us plebs have. And so anything out of the ordinary, anything unexpected, could lead to fears that, oh God, the Fed is seeing something terrible coming over the horizon. Better sell everything and exit all markets. So I think really, unless its hand is forced, keep steady.
Yeah, I get it. I mean, it's true. I'm one of those people that kind of thought that they would do a little bit of more cutting because of potentially what's going on with the next presidential election and moving from there. But I was wrong, and they've been actually very apolitical. They've been staying the course and doing what I think they should have been doing, which is fine. I think they came into this a little bit late, but they're making up for lost time. So we'll see what it is. What's up, Ben?
I was going to say, Powell did say they're not going to base their decision on any single data point.
Right.
So could be that he actually can just means what he says.
And it's funny because like we keep hearing the same thing, and people are like, "Nah, he's full of it," and then they start to short or they start to long or whatever else, and he's just like, "No, I'm going to stay the course." I find it interesting just how far we're going, but this will lead me to actually my last question. And I was going to I had talked to you guys about a question about presidential elections, but there was two things. First of all, Ben had a good point, which was I don't care about the presidential elections. It doesn't really affect me right now. And I'm just going to kind of like let it go. And I think on this channel, I think it's best if we just stay as apolitical as we can, but we have a plan in reserve. So I'm gonna change things up. Instead of asking you about the presidential elections, let me just talk to us about your plan, either way of what happens. We've heard from both of you guys before, but I think it'd be good just to tell us again, like, whatever president is it the president-elect or who actually comes in, what's your plan right now for investing in the market? Is it just simple as just doing nothing? Or is it, well, I'm moving funds around, I'm having more dry powder, or I'm actually DCAing Bitcoin? This is the question I think most people are going to want to know. So, Guy, you're in the upper left. Let's start with you.
Okay. The only thing I'll say on the political question is, which is something that I think has been forgotten about a little bit over all the talk of who the next president is going to be. Actually, what's really important is who controls the House and the Senate. Because if you have a pro-crypto president, if you have an anti-crypto president, they won't be able to do anything if if their party doesn't control the House and the Senate. So it'll be immaterial. So I think maybe that's something we should pay close attention to as well over the coming months, because that will be just as consequential, if not more so. Anyhow, yeah. So my plan, I'm generally, in terms of where I'm invested with crypto, I have as much as I want of the large caps, Bitcoin and ETH. I'm not looking to add any more to that stack. I'm fine with that, and I have my sell targets set for pretty much everything. So the plan over the coming months is to slowly accumulate a few more of the alts that I'm kind of looking at. I was sort of leaning towards low caps, looking towards picking up more of those because of obviously potential upside. But I've also been thinking in recent weeks as well, probably, the size of the market now, the size of the crypto market, and just the breadth of different coins and tokens that are out there. I'm trying to think ahead to how that landscape is going to look to people, to new retail coming in. And there's going to be so much choice. There's going to be that liquidity is going to be spread so thin that I am thinking sort of more on the side of larger cap cryptos than I was previously, because the upside is more limited, but I think they could still attract a lot of investment, and I think it may be as wise to try and chase more 10x's, for example, than chase a handful of 100 or 1000 x's, because I think the liquidity, I think the choice is so spread out. So I'll be looking to accumulate a bit more. Like I say, I'm happy with what I've got in BTC and ETH. And yeah, I think, I mean, I bought a little bit of this recent dip. I'm kind of expecting things to go sideways for a little bit, as they seem to have done sort of at several points over the last couple of years. And yeah, I should really, I should really be a bit more disciplined about DCAing into alts that I'm interested in. So I should try and get more of that, get that strategy sort of back up and running again, like I have in the past. But yeah, I'm focused on accumulation now, and there are so many different. Everyone's got a different idea as to when the bull market could come, when the bull market could peak. What sort of prevailing conditions are going to be ideal for this scenario or that scenario. So the main weapon in my arsenal, I think, is going to be patience, to watch carefully. Obviously, we'd all like it to come sooner rather than later, but I think we have to be prepared that it might take longer than we think. And so I've set my targets, and I'm happy to wait patiently until they're finally met.
Good. You know what? Great points. Sometimes doing nothing is doing everything. If you, and I know like Guy, you say, well, I got to get back into this. I think you've done it. I mean, just think of, look, you've probably done enough. And then someone just asked, hey, which coins, Guy? I'll tell you which coins. Go to Coin Bureau Club. And that's the ones where I learn about all these different coins that are out there. And thanks for some of these. Now, they weren't all perfect, but we'll take it. Hey, so Ben, same thing here. What's your strategy? Because I mean, you've been pretty. I mean, you're like Jerome Powell. You're like, look, this is what I'm doing, and people are like, no, you're not doing that. But it's been the same thing, right?
I don't really think it matters, honestly, for the crypto markets. And I know, like, I mean, the thing about going into the political realm is even saying things like, I don't think it matters, could piss someone off.
I said it yesterday. And people were actually like,
don't you care, Ben? Don't you care?
Don't you care about my bags, Ben?
Here's the reality. Bitcoin's gone up under both Democrats and Republicans.
True.
That's a fact, right? I mean, I think the bigger thing for the market is the markets tend to do best when it's a split Congress. And the reason for that is because when you have a split Congress, they're not able to get as much legislation through because they're constantly butting heads and they can't get as many things passed. The reason why that's important is because there's less uncertainty, right? If you have one party in power completely, then they can pass all sorts of stuff in really short periods of time. In the markets, there might be some uncertainty associated with that. But if you have a split Congress, the markets are like, all right, well, nothing's going to change. so we'll just keep on doing our thing. And there's like, there's more certainty in a split Congress, I think. And so, yeah, I don't really think it's going to make a huge difference over the next 4 years. I think that, I think that, I've seen crypto do well under either administration. That doesn't mean it'll always play out like that, but that's just a reality. I think that, I mean, it's really a tough call because we sort of talked about the Bitcoin dominant stuff earlier, and we've gotten really close. Like we've made, it's been a long journey, and it's gone to 58%, but there is still theoretically, because I mean 60% was the target, right, for me anyways, not 58. I mean, at this point, you could argue, are you just pinching pennies, right? Are you pinching pennies? Is it worth it? And I think it definitely could be worthwhile to hedge, right? I think it could certainly be worthwhile to hedge, sort of those Bitcoin dominance views. With that said, just so people know, dominance as high as it's gone, right? And as many people have said, like, oh well, congrats, you're right. I mean, it actually still hasn't gone to where I think it actually can go, and that's 60%, right? And I think there's a good chance. And by the way, last cycle, dominance didn't top until after the Fed cut rates, and it didn't top until the Fed began to expand their balance sheet, right? So that's just reality. And neither of those things have happened yet. So, there does still exist a scenario where dominance continues to go up, right? And I think for me, and I know this is kind of going off your question a little bit, but I mean, you're kind of asking like, well, what are you doing, right? I
What
mean,
are you
I think
doing?
for me, I think that Bitcoin dominance could top as early as September. I think that it might top next month. It kind of depends on, I mean, because it's still going up right now, right? I mean, it's at 57.2. So it's continued to go up for a while. So I mean, look, if it can go up a couple more percent over the next month or so, it might top. And then what you'll probably see is market participants start to take on more risk in the altcoin market. Kind of like what Guy was saying. He was saying, he's probably going to figure out like, some of those altcoins to get throughout, through the end of the year. And I especially, I think after rate cuts and once the Fed begins to expand their balance sheet, I think more and more people are going to start diversifying more, because for the last 3 years, right, the very simple but effective strategy was just stick with Bitcoin, right? And it's going to go up, it's going to go down. Who really cares? Everything else, for the most part, I'm not talking about Solana, guys. For the most part, everything is going to bleed against it, right? And even Solana, I mean, even Solana is still lower than where it was in 2021 on its Bitcoin pair, right? But again, it's had a great rally, right? I'm not trying to diminish that, but it's just that collectively, that would be the expectation. So, my thought process is that dominance is going to top in the next 1 to 4, before the end of the year, right? Before the end of the year, I think it'll top. And I think ETH Bitcoin will bottom before the end of the year. And then next year, I think Bitcoin dominance will go down. And so I think that people should plan accordingly.
Exactly.
Gosh.
I will just say that if that is true, then everybody who's asking about the altcoin season, there's your answer. I mean, we could see it in 1 to 4 months, and then that's the start. That's the kickoff. And I will say, like
I think January. I think January would be, yeah.
No, but you know what's funny is like nothing changes. Like we talked about the 4-year cycles. We talk about and we overlay things as far as fractals. The guy has done a great job with macro and what's happening and the effects. Ben, you've done pretty great with just saying like, hey, this is probably what's going to happen as far as like comparing 2019 to 2020. But the 4-year cycles are still intact. And when Bob Lucas talks about a left translated cycle, I go, it could, but then even he's like, no, it's not going to happen. 2025. So I know like everybody's like, when? There's delayed gratification. I think we're in that state right now. And this, I think, would be the time to be in. But
well, and guess what? Guess when dominance stopped last cycle? In December of the halving year.
Which 60? Is that what we're talking about?
No, I mean it was over 70 last cycle. Yeah. Where it topped. I'm saying it topped in December of the halving year.
Right.
And again, it's like I keep thinking like, is this time different? It doesn't really look like it is. It looks like it's. I mean, look, it is different in some regards because last cycle we had rate cuts in the pre-halving year, not the halving year. But if you just like switch the years, right? If you just switch them and say, all right, well, what if we're just switching which year is which within the cycle, but that maybe next year plays out how most post-halving years play out, where dominance goes down. Nothing's changed, right? And that was the thing back in March and April that we were talking about on this NFA live stuff a lot, and we were just like, like everyone's talking about a left translated peak, but what happens if the market just cools off for the next 9 months and doesn't do anything until 2025? I mean, that's what happened last cycle. We had like a 9-month period where we just put in lower highs and lower lows, and then the market picked back up. So definitely could see that happen here again.
Well, okay. So yeah, as far as that goes, yeah, I can see where we're coming from, but then you didn't really answer the question, which was, what's your strategy right now? Because I'm going to tell you, like the thing that you always are talking about is you're saying time and wristbands, and it's been very simple.
Right.
So are you still doing that type of thing? And if people don't know what I'm talking about, just kind of go over. Not really go here. I'll just do this. I should have just done this. And
yeah, no, I mean, essentially, I just DCA when the Bitcoin risk is below my threshold. And I think that, you know, every person is going to have a different threshold for like what that even means. Look, I think I do think dominance will go up. I do, but I also know that you know, from prior things that have happened in my own sort of trading journey, right? Like I don't want to become like I don't want to be super aggressive about that idea this late into it, right? You know, so that's why I do think it will go up. I still think that Bitcoin will likely outperform most alts for at least another month or two. Okay, that's what I think. But I think that what I will be doing, I haven't changed anything now. I mean, yeah, if you're asking, I mean, I haven't really changed anything yet. But I think later this year, it's going to make a lot more sense for me to start hedging against the whole Bitcoin dominant stuff, especially because I think it's going to go down next year, right? Like I don't, you know, it's not about being a maxi. It's not about any of that stuff. It's just, look, monetary policy is going to loosen up, and it's going to make sense to be a little bit more diversified in a post-halving year than it has been for me for the last 3 years. So.
Gotcha. Hey, well said. Okay, I'm not gonna. You know, we had another question, which was, you know, what would be the catalyst for Bitcoin above 60%? But I mean, I think yeah, what'd I say? Bitcoin. Oh, Bitcoin dominance. Yeah. I was gonna say, I think we pretty much answered most of those questions, so I don't want to beat a dead horse.
Well, I mean, look at all Bitcoin pairs, right? I mean, we'll beat the horse, Rob. Look at all Bitcoin. Look at all Bitcoin pairs. You know, I mean,
we'll beat that horse.
Yeah,
okay.
we'll beat that horse. We've been beating it for the last 3 years. Let's just kill it already.
Let's finish it off.
Yeah,
let's just keep going.
No, I think that, I mean, look at all Bitcoin pairs. They're still just off the range lows. You know, if they were to drop, you know, 20 to 30% more against Bitcoin, it's complete. You know, we can it's signed, sealed, it's done. You know, we can move on with our lives. You know, what is the catalyst going to be? I don't know, but remember, as I've said before, the narrative follows the price, not the other way around. So it's kind of like, you know, I don't know what it's going to be. Like I didn't know what it was going to be to send dominance to 58% on Monday or on Sunday, but I thought it was going to happen, right? And now we blame the carry trade for it. So I don't know what it's going to be, right? I just think it's going to happen.
I gotcha. Well, I was way to beat it. I mean, that was pretty well into the ground. I appreciate it. All right, everybody. So look, that concludes the questions that I have. Now we're going to go into your questions and kind of get those things answered and go from there. If you have questions right now that you haven't put in the chat, just do that and we'll answer them as they come fit or as they come in. So let's see. A lot of people are saying that Ben, Guy, you guys saved a lot of money. Thank you, because of different, you know, macro factors and taking a look at things and you're going to Bitcoin. Somebody asked when Moon. I don't know if anybody has the question. If you want to take that one.
Look, look, people have been talking about alt season forever, right? I mean, this has been something that's been talked about over and over and over again. The best chance for it, the highest probability, if it's going to happen, right? If it's going to happen this cycle, which it would, if we assume this time's not different, right? If it's going to happen, it'll be next year. That's what I would say.
I would say too. Yeah. Hey, you know, here's a good question. Like, okay, Ben, you just talked about it, and a Guy, you've been talking about it for a while on the club. What are the next altcoins? And here's another question, Ben. If you think that Bitcoin dominance is going up 60%, and Guy, you just talked about 60. It. You're like, I need to get. What did I say? Bitcoin dominance? Yeah.
Well, you said above 60. I just think, you know, show me 60 and I'm good.
Oh, okay, cool, 60. So what would you get into then, as far as altcoins? I'm going to start with Guy first on this one, because that was directed towards Guy.
Sure. Well, I bought the other day. I bought the dip on NEAR because that's a project that I'm a big fan of. That's sort of my my AI play. Because I found, I don't know, I've been a bit late to the sort of AI cryptos party in part because I'm fairly convinced that it's sort of it's a bit bubbly, and you know, I think they'll run out of steam and then there'll be a new sort of wave of them. So NEAR is sort of, if you like, an infrastructure AI play. So that's what I bought the dip on the other day. The other large caps that I'm looking at are things like SUI. I already hold some SUI, but I would definitely add to that. I did actually buy a few memes the other day as well, including Pepe. Like I would
Really?
buy some Pepe. I would buy some Pepe. Like it's a strong meme. That's what I like about it. It's the most meme of the memes. Do you know what I mean? Like you see it every day on. So I'd probably buy some more of that. But then yeah, I would further down the risk curve. You know, when you're getting into sort of more micro cap things, I'd have to take a much. I'm still sort of trying to figure that out because it's just so there's just so many, you know, and that's why we've got Coin Bureau Club, really, to sort of filter through and look at a few of those. I mean, the Shrapnel review, that's a blockchain game, a sort of shoot 'em up game, really interesting project. Terrible tokenomics, but other than that, Shadow Token, that's a great one. That's a sort of deep in on Solana, the sort of storage layer for Solana, kind of doing what Arweave did last cycle. I actually picked up some Shadow as well, and I'd look to buy more. I mean, we've done quite a few on the club, and there's been some really promising ones, some not so promising ones. World Mobile Token, another great deep in play, which I picked up some of a while back. Hive Mapper too. So yeah, deep in is going to be a big focus for me, I think, because I'm just really, I feel like of all the kind of narratives, that's the one that makes the most sense to me. And I can see how these projects can work and how they can benefit people and how crucially people can understand what it is they do. Those are some that I'm into.
See, this is why I like this show, because me, like, I'm kind of even more so far down than Guy, because I'm a little bit more degenerate. And then of course Guy kind of brings it back, like, well, I do near, which is in the top 25, and he talks about World Mobile Token. And now we're gonna get to Ben. Ben, I know this is your least favorite question, but if you're looking at altcoins and altcoin season does start next year, do you even get into that, or are you looking to do anything? And which one would it be? Would it just be Ethereum and that's it, or what?
I think Ethereum would be the obvious one. I think that because my target on it was been 0.03 to 0.04, and I was like, oh crap, we just went to 0.04. I was out of town when it happened, but it went to 0.04. So yeah, I think Ethereum would be the obvious answer. And I know a lot of people are dunking on ETH, and they think that I've been dunking on ETH because my views on ETH Bitcoin, but that was based on monetary policy. It wasn't based on my thoughts about Ethereum. Ethereum, there's been a lot of good things for Ethereum that have happened over the last few years. And I think that it often gets overlooked by a lot of people but it's mostly just because of monetary policy. I think is what has caused people to overlook it. And the people that thought those things were going to stop the ETH Bitcoin ratio from bleeding, they were wrong, not because of that, but just because of monetary policy. Right. So I think Ethereum is the obvious answer, right? It's the obvious answer. It has been around, since 2015. It's been number 2 for most of that time.
Right.
So I think that has to be the obvious answer. And beyond that, I don't really have any specific ones, but this is what I would say in order to figure out what those would be. And I've said this for a long time. From when the Fed cuts rates, so starting in September, assuming they don't do an emergency rate cut, which I hope they don't, because as one of you guys said earlier, right, if you do an emergency rate cut, the market's going to be like, well, why the hell are they doing an emergency rate cut? And also that might make the carry trade even worse if it's because I don't think the market's pricing in an emergency rate cut. So I would say, look, wherever alt Bitcoin pairs are in, say, September, okay, individual alt Bitcoin pairs, if they can hold those lows, whatever low it is, through December, then that's your answer, right? That's your answer. Those are the altcoins that will likely do well against Bitcoin in 2025. Whichever ones can set a low by September and then hold that low through December. That was what my answer would be. I don't know. I mean, like I'm not smart in being able to know which ones those are going to be. I could pretend like I know. I could go buy an altcoin and then shill my bags, right? But I think that I don't know. Like, I don't know which it's going to be, and that's what I saw last cycle. Like, no one knows. just let the market tell you which ones are not relics, because the issue with altcoins is that even when Bitcoin dominance turns around and goes down, which I do think it will in 2025, even when it goes down, there are going to be a lot of altcoins that still go down against Bitcoin, right? And they're going to become relics, and they're never going to gain against Bitcoin durably ever again. So you have to be careful, right? And that's sort of the reverse thing of what, you know how for a long time it's Bitcoin dominance is going up, and there's some alts that are outperforming Bitcoin. There's also the reverse of that. Bitcoin dominance can go down, and most alts are outperforming Bitcoin. Don't be the person, don't be the schmuck stuck with, with a few altcoins that are still bleeding against Bitcoin, even during a Bitcoin dominance downtrend. And that can also happen. So that's my answer, Rob. I know you're not going to be satisfied with it, but that's my answer, and I'm sticking with it.
I got to tell you, man, I can see why, like, we know this, and this is not going to be popular, but there's a lot of fluff and nonsense out there in YouTubeville, and it's just ridiculous. But unfortunately, when you play that part, it helps with views and everything else. So I can see why Jay today says Ben breathes and pisses people off. I can understand why that actually is, because when you just said, pretty much just told people your altcoins are going to suck for a while. But you know what? Sometimes the most brutal truth is greater than the sweetest lie. You have to understand this is where things are going. And right now it's going to be, I think, me personally, I think it's just, okay, if altcoin season is coming, which I think we all know it at some point, it has to, right? Nothing goes down forever, nothing goes up forever. But if you're okay with going, okay, I can lose right here as far as like unrealized losses, but if I accumulate now, I can be rewarded later on. I think if you understand that, then you're going to be a hell of a lot easier, mental wise. And if you don't, then it's one of those things where like, you're going to be like 99% of the people that just say, hey, I got in, someone told me about hot fudge tomato coin, and it didn't work out for me, and it's a scam, and I'm out of here.
Right.
And that's really what it comes down to. And it sucks. I know it sucks because I went through the same thing. But yeah.
Well, I mean, look, believe me, the last 3 years would have been a hell of a lot easier just to list off altcoins, right? I mean, but I think I do think it's important to go through a cycle and watch that Bitcoin dominance, like watch how it behaves for an entire cycle. And then I think a lot of people end up learning a lot about how the cycles work just by watching it day in and day out for 4 years. And then in the future cycles, you might not, you'll just kind of know, okay, there's going to be a period where dominance is just going to go up for a long time, and that's just the way the cycle works. It's not a jab at anyone. It's just that's the way the cycle works, and I don't control it.
It is what it is. It is what it is. Okay, I got you. I'll be okay with that answer. I'm not going to drill you on more altcoins, but real quick, Jay today comes back and says, does anybody care about XRP's win? Yeah, me either. I heard about this on the live stream. They got 125 million. Looks like a fine. And I was like, well, that's not great. And then it looks like they're barred from, not barred, but moving forward as far as what the SEC, it looks like a loss. But can somebody help me out here? Because as I understand it, and Guy, you might be able to get this one. As I understand it, it was supposed to be a $2 billion fine. And the SEC only got 125 million. I know this, some people don't care about it. Me, when I look at this, I think the narrative is maybe it's good for the SEC to take that second, third, fifth loss or whatever else. So just to shift gears, Guy, what do you think about this one?
Yeah, 100%. I think it's a win for Ripple when you consider that the SEC were after 2 billion, and it closes it, and it's great for crypto because it as a whole, because it's a loss for the SEC. Yes. And the whole sector can move on. And this thing's been running for nearly 4 years. That's why I don't know how much money has been burned on lawyers' fees, but I bet it's more than 125 million, which is just ridiculous. But I hope that I don't know if it will, because the SEC must surely have had so many, surely must have been told this so many times. But I hope this sort of brings to an end the era of regulation by enforcement, because it's just not working. It's just not working. It's burned millions of dollars and 4 years, and what have they got to show for it? And obviously Ripple had that kind of win last year where the judge said that the It was only I think it was the institutional sales of XRP that had violated securities laws. The retail sales, the sales on exchanges didn't. And since then, you know, it's just dragged on. I think it's just great that the whole thing is finished and over with, and everyone can move on.
I got to agree. There was something that both you guys said, which was, you know, we shouldn't really, it's not so much about the president, it's about the House and the Senate and getting those people in there. And I think that's what you said, Guy. And then Ben, coming back to you, you said more things get done when there is a discourse and there's not an even amount, because you have to, you know, as a lawmaker, you have to make some concessions. And of course, if you don't have that, then you're in a banana republic, essentially just doing whatever you want to do. Yeah. So when this happens and goes down, take a look at that. So if you're worrying about the presidential candidate, it's not so much worry about in your states, in your county, in your whatever. And that's where we go from there. So look, we're coming up. We've actually been here almost an hour. So we talked about a lot. I appreciate you guys coming in and taking the time of almost an hour. But that is it for today, guys. I want to say thanks again for stopping by. I appreciate it. And any last words of wisdom before we take off, Guy, Ben?
I would just say, yeah, I'd just come up with a strategy and stick with it and try to tune everything else out. I mean, the news cycle and all the macro stuff. I mean, you know, I don't really think it should play a huge role in what you're doing. I think you just need to figure out how you want to be an investor and tune out, you know, go live your life.
Go live your life. Guy, what do you got?
I think just keep paying attention. This has been a kind of wild week, and I think although it was tough at the beginning of the week, I think it's the kind of thing that we need to remind us all just how volatile crypto is. But I think, you know, stuff is happening, and I think people who pay attention now and do the research before everything gets really frothy, before, you know, everyone starts FOMOing in, I think that will stand you in really good stead. So keep following the drama.
Keep following, have a plan, stick to it, and eventually you'll be rewarded. All right, everybody. Thanks so much. You guys can find Guy and Ben and all the info and the socials and whatnot in the links in the description, also Coin Bureau Club. And don't forget, all that great data that we pulled that I stole from Ben's website, you can have access to that. So check that out. Links in the description. Go from there. Thanks, everybody, and we'll see you on the next one.
See you.
See you guys.